Listen, good morning to you. The Aussie dollar this morning making a bit of a run towards 80 US cents. Just a short time ago, it was around 79.5. You can see 79.55 there. Also stronger against the yen, 89 yen and 61 British pence. So against most of these currencies, the Australian dollar is actually going pretty well at the moment. And this is a measure that our economy is going okay. Another is that your super fund, on average last year, should have returned 10.4% after tax, delivering some $140 billion collectively into our superannuation funds. Now, the best of the large balance funds returned 13.2%, so this really gives you a very good guide when it comes to looking at your own fund and its performance in the coming weeks. Now, a couple of things also happened today. The Treasurer, Scott Morrison, makes a speech that there's an emerging picture of economic growth that should build confidence. Now, I spoke with the Treasurer last night. He hosed down those suggestions that Australia's economy is in the sort of position short-term to support interest rate rises. But he has noted the Reserve Bank, an independent body, as he says, that growth, inflation and employment to justify rate rises are some way into the future. So that, again, if you've got a big mortgage, is not bad news. Now, on this subject today, the latest employment numbers are also released. The Bloomberg survey of economists says the rate should dip to 5.6%. But broadly, until the unemployment number has a 4 in front of it, 4 point something, people shouldn't even think that interest rates will be raised. The problem still in Australia is that while the vast majority of people do have work, a lot of people don't have enough hours, and therefore many family budgets are being squeezed. So until that spare capacity in employment markets is taken up, wages growth will remain low and the economy really won't feel as though it's powering along. Now, just a final quick one on the banks. The big four saw their share prices jump between 3 and 4% yesterday, adding around $13 billion collectively to their market value. The reason is the regulator APRA said they need to build their Tier 1 capital reserves to 10.5% by 2020 to make themselves unquestionably strong. In other words, if there was a financial crisis, they wouldn't have to come back to you, the taxpayer, to try and bail them out. But in truth, most of the banks are close or already meeting those capital requirements. This means they don't have to tap shareholders for the cash, hence this big rise in price. The Dow Jones index overnight up by 66 points.